Hi, this is A.K. Asnani from Smart VRC, Bhopal. Topic is market at historic high. Is this time to buy? BSE Sensitive Index is at record high. It has crossed its previous high of about 42,000 and presently it is very near to 44,000. This is a big achievement. Nobody could have ever imagined during March, especially on March 23rd, when the Sensex was at around 26,000. Very big jump. Now the question arises, everybody thinks of, shall we invest at this juncture? Those who could not invest during this sharp upside movement, they are feeling left behind. Also, worldwide economies are changing very fast. COVID situation is changing very fast. Country-wise, worldwide, and hence the opportunities are also changing very fast. Let's see how FIs have made the investment, and what we are seeing here on the screen is a net investment and in cash. Cash means in the delivery segment, and as you can see, this for a 1 year, data is for 1 year and it is month wise. As you can see, for November, December, January, February, there was a clear trend of declining, or rather I should say they were selling consistently from January. It increased in February, and in March when the lockdown was declared they took out about 65,000 crores from Indian market. And then in April, though the trend was negative only, but the selling was not that intense. And then in May it turned positive. In June, though positive, but far less than the previous month, and July also, August. So what I mean to say is, from April, May, June, July, August and September, it was sometimes up, sometimes down, no clear direction. In October, once again, it moved up, and so there was no clear direction that in which direction FIs are investing, apart from this big negative number of March 20. Now let's see what happened in the month of November. In the month of November, for first 15 days, yes, for only first 15 days, already they have crossed 33,000 crores of investment. 33,000 crores. As you can see from the past data, in none of the single months during last 1 year they have ever invested so much amount of money. In fact, they have not crossed even 20,000 crores mark, and for the first 15 days already they have crossed 30,000 crores. When we look at this data on day wise, then as you can see, for each and every day they have invested. Net investment is positive, and positive by big numbers. As you can see, for many days it crossed 5,000 crores. And it is not by chance, but there is a reason. There is a reason because the number of fresh COVID cases per day are declining fast for our country. On 16th of November, the number was only 30,548, while the same number on 17th of September was high and it was touching 97,000 fresh cases per day, and that has reduced to almost a third. And not only that, it is a consistently downward pattern, and that is what is creating excitement in the political circles, among the economists, and in stock market. This is what the Oxford Economics has to say. This is a global forecasting firm. It says that these are edited excerpts, and it has to say that robust bottom-up activity data suggests that the economy may be recovering faster than we anticipated. As such, we see an increasing possibility that the RBI's easing cycle has ended. These last 5 words carry a lot of significance from the investor's point of view. RBI's easing cycle has ended. What it means? It means RBI may not provide more liquidity, or RBI may not cut the interest rates, and rightly so, because the inflation is rising and also the economy is moving fast in the upward direction. There is no need of further interest rate cuts. This JP Morgan Asset Management, we see broad potential in India from a macro perspective. So they are looking from a broader perspective, macro perspective, and they say that they are looking at good potential in India. There is Goldman Sachs. The investment case for India has improved now. We expect a catch-up laggard rally given the positive news flow on the vaccine front, which could spur a faster than expected recovery. Rightly so, and all major financial institutions, foreign financial institutions rather I should say, are very positive, and they have revised their GDP rates, and even RBI has revised its GDP rate, and it expects economy to turn positive in the third quarter. This is the Morgan Stanley. What it has to say? India's earnings revision trend has improved sharply, and valuations are on the cheaper side of their historical relationship with Asia and emerging markets. This is what the Morgan Stanley has to say. Now, how the various stock indices have performed. Now here we shall consider only 3 indices, and from Bombay Stock Exchange, that is BSE. First is BSE Sensex. With respect to the low created on 23rd March 2020, BSE Sensex is up by 69%, BSE Midcap Index is up by 66%, and BSE Small Cap is up by whopping 79%. Compared to these 3 indices, our Smart Billionaire Picks is up by 88%, which is a mix of large, mid, and small cap, and it has outperformed all these 3 indices by wide margins. Smart Freedom is not much behind, and it is up by about 75%. And considering that in Smart Freedom, mostly these are the large caps and little bit of mid caps, and naturally its performance was expected to be lower than the small cap indices, which have grown by 79%, but way ahead of Sensex and mid cap. So these are some of the stocks which have gained considerably during last 6-7 months, 8 months. We have advised Cosmo Phillips from 242 to 438, Apollo Tyres 97 to 172, Hester Bio about 70%, and Infosys almost 80 to 90%. So, and all these stocks are not from the same category, but some are small cap, some are mid cap, some are large cap, some are leaders and some are not leaders, but they have niche products. So we are not confined to any particular type of investment, any particular size of the company, but what we are looking for is the worth. There is another product, Smart Multibaggers, and here the performance is much better because we recommend only multibaggers here. And Motherson Sumi from 60 to 132, more than double. Advanced enzyme from 104 to 322, it is more than 200% gains. And Caprians from 27 to 78, once again almost 200% gains. These are the performance in a matter of only 8 to 10 months. Now let's consider some indicators, leading as well as lagging. GST, as we all know, there was a great jump in GST collections, and now GST collections are higher than the pre-COVID levels. PMI manufacturing, PMI services, both are doing exceptionally well. And automobile sales, we all know what has happened here, and totally unexpected large gain in the total number of vehicles sold in the month of October. And from the indications, it appears the trend is gathering momentum in the month of November also. Electricity consumption is up. Consumer electronic sales during Dhanteras period is about 10% up as per the reports. Results are pretty good and unexpectedly good from almost, I can say, majority of the sectors. Some of the companies have already restored the pay cuts. Now there is no more pay cut. Whatever the pay cut was there, it has been cancelled, and now they are getting the normal salary. Employees are getting the normal salary. So these were the leading and lagging indicators. There are enablers which can continue this economic growth in times to come, maybe beyond pre-COVID levels. First is the agriculture stimulus. Government has given a lot of emphasis on agriculture, and lot of subsidy has been declared for the fertilizers. And before that, there were reforms for the farmers, and then government has continued its MSME stimulus. So medium, small and micro enterprises, they will continue to enjoy stimulus from the government, and rightly so, they deserve. Real estate incentive, we all know government has given a lot of incentives to buy the house, because house and automobiles, these are the two sectors which can really lift the economy up, because many other associated sectors are dependent on new houses and new automobiles. Labor reforms, we all know. PLI, that is the production linked incentive, government has identified many sectors, and including the API, the auto components, mobile phones and others. And if India succeeds, our country succeeds in this PLI scheme, then there is no looking back. Defense, we all know government is putting a lot of stress to manufacture the defense equipments within the country, and some big names have already entered into this field, and we are going to see very surprise names in this sector. IT BPO, government has reformed the rules and regulations for work from home, and especially for BPO and KPO, the companies will be big beneficiary. So the question arises, is this the right time to invest? Taking a small break from the regular presentation, I am going to tell you about the festival bonanza which we have declared for our various products and services. Number one is the 10% flat discount on all advisory products. When I say advisory products, that means Smart Gains, Smart Multibagger, Smart Freedom, Smart SIP and Dr. Smart. These are the products where we are giving 10% flat discount, and also we are giving a gem stock report. But I am sorry to say that this gem stock is already up by about 10% from the advised price. So be very careful while subscribing if you are not happy with this 10% already up stock. So this scheme is going to end as and when we receive the 500 subscriptions for this scheme, Festival Bonanza 1. And also this scheme is applicable not only for the new subscriptions but also for those who extend the subscription. If an existing subscriber extends the subscription, then also this scheme is applicable, and subscription shall be extended for 1 year from the present expiry period. And to avail this offer, you have to apply a coupon code SMART10 in capital SMART10. While subscribing, you have to write this coupon code and press the link, apply this coupon. Like this. This is our subscription period. This is our subscription page, and when you press this subscribe link, you will reach here. Here in this box, in this field for coupon code, you have to write SMART10 and then press apply coupon. Then whatever products you select from here, there will be a 10% discount on those prices. As I said, the gem stock is already about 8 to 10% up, so don't be surprised. Target returns are 156%, so you need not have to bother about those 8 or 10% returns. Of course, it is significant considering that these returns have been achieved during a period of last 8 to 10 days, but our target is 156%. Long way to go, and holding period is 4 years. Risk is medium. It is a mid-cap stock, but soon it will get converted into large cap. Liquidity is pretty good, and this stock has not been covered in any of our products during last 5 years. And also I would like to add that this company manufactures high quality products and management holds high ethics. Festival Bonanza 2. Subscribe to any of the 4 categories of Smart Insights Pro, our new category, Smart Insights Pro. Under this Smart Insights Pro, we have 4 categories, and under these 4 categories there are videos. Also there is a quiz, and after finishing the quiz you will also get a score. These are very interesting videos. They not only impart the knowledge, but also we have shared our wisdom, my wisdom of 31 years of my long journey and successful journey in stock market, and I'm very sure you would love this product. If you subscribe to any of these categories, we shall be very happy to provide you 2 months subscription free to Smart Gains, and which is worth about 470 rupees. If you subscribe to all the 4 categories, which I strongly recommend, then you will get 1 year subscription of Smart Gains totally free. So it is almost 45% discount if you subscribe to all the 4 products. Offer closes on 20th of November 2020. Coming to the Smart Bonanza 3. Smart Bonanza 3 is very simple. You need not have to invest anything, but you have to refer to your investor friend or relative who is interested in investing, or probably he is already investing in stocks. And since if you are happy with our performance, then you can definitely recommend to your friend. And if your friend subscribes to any of the advisory product, then you will get 2 months subscription free for any of your existing subscribed product. Thus, if you are subscribed to Smart Multibagger, and if you choose to extend the subscription of Smart Multibagger, you will get benefit of 1475 rupees. and you need not have to invest anything, but you have to only refer to your friend, and your referred friend or relative should subscribe. That is the only condition, and it is a win-win condition for all. And I strongly recommend you to avail this scheme. Offer again closes on 20th of November. So these are the 3 festival bonanza. All are coming to an end on 20th of November. So resuming our presentation, what we were discussing is this the right time to invest, considering that the market is at historic high? So auto and related sectors, we should be very cautious. The reason is, in the month of October, whatever sales we have seen is from the company's point of view. Those vehicles at that point of time have yet not been sold by their dealers. So we should be very cautious. And moreover, these automobile companies and associated companies, they enjoyed the benefits of low raw material cost during the first 2 quarters. But now those raw material prices have moved up, and moved up pretty sharp. So be very careful, and most of the stocks have already appreciated handsomely, up to 50% they have increased. So we should be very, very careful. Also, we should not forget that many people have lost their jobs, and also pay cuts have been resorted by the companies. So all may not be that well, rather I should say all may not continue that well for a long time, and be very, very cautious. Then we have hotel, tourism, cinema. Here you have to be very stock wise. You have to select very stock wise, because of course lockdown has been removed and they have resumed their operations, but it may take a long time to reach to the pre-COVID level. And at the same time, many of these stocks have not risen, have not gained in proportion to the index. So you have to be very careful while selecting the stocks. Metals, I would at this juncture, we would prefer profit booking, because metal prices are pretty up, and because the economy has picked up. Maybe for some more time metal prices may go up, but they cannot continue for long, because as I said, the related user industries may not continue for long to gain. Finance and related, yes, many of the stocks are pretty up, but still they hold potential. And many of these finance and related companies, they have garnered funds to take care of the upcoming NPS. And fortunately, the COVID cases are going down, and those high level of NPS are no more required, and these companies are flush with funds, many of the companies, rather, not all. And you have to be very selective, either you have to hold or buy, but that all depends on the NPS and the company specific. We would advise to go with the big companies. They will be beneficiary in a sense, because most of the finance and related companies have faced very hard times. They may not be able to come out of this crisis so soon as compared to the bigger companies. So bigger companies may grab the share of smaller companies. Cement, profit booking. Why? Because most of the increase in net profit is because of the low energy prices and not because of the high sales. It will take time to get high level of sales, high growth in sales, and the advantage of low energy cost in terms of the coal and crude may not be available in the 3rd or 4th quarter. Pharmaceuticals, be selective, because pharma has not much to do with the economy improving, except for those companies which were producing drugs related to the COVID. Specialty chemicals, most of the stocks are pretty up, and commanding very high valuations of P ratio of 30 and 40. So partial booking profit is advised. Agrochemicals hold because the monsoon has been pretty well and well spread, and also the government is giving a lot of stimulus to the farmers. So agrochemicals hold good potential in medium term. FMCG's exit, not much is now left for FMCG players, and real estate, be prepared to exit. Most of the stocks are moving up, have already moved up, and the party may not continue for long. It all depends, but at this juncture it appears that the party may not continue for long, as I said, because of the loss of job for a large number of people and the pay cuts. IT, be selective. These companies have enjoyed good profits because of the work from home and because of the high level of digitization, but once the vaccine arrives, maybe in another 6 months or 9 months, both the benefits may vanish. So be very selective. Infrastructure, only road construction holds promise because government does not have that kind of funds to stimulate this sector, and it will look for those areas where there is requirement of large number of laborers. And last is the paper, and I would recommend to make an exit. It will take a long time for these companies, for this sector to revive. When you drive any four-wheeler, you are highly dependent on the windshield or the front view glass. It is bigger and it gives you a very clear view of the shape of things to come, how the traffic is coming or how the road quality is there and all those things. And rear view does not tells you anything what is going to happen in future. Rear view only tells you what was there in the past, and the same holds good in stock market. What has happened in the past does not make much sense. What is going to happen in the future? So be very careful. The stocks, the sectors which have performed very well during last 6 to 8 months may not continue to do well in times to come, and economies have become very dynamic, and be very careful. Yes, you can invest at this time, though indices are at high, but definitely there are signs that India is going to emerge a very stronger economy. Of course, some different sectors may lead in the next bull run. I have given you only my views, my personal views. I have not given any advice. So I request all of you to perform your own due diligence or consult your advisors before taking any action in any sector or any stock. Thank you. Thank you very much.